all the accounting steps and reconciliation for each tax year. Pre-transfer, pre-disposition, pre-deposit, withdrawal, pre-exchange, and conversion needs to be accounted for. And every digital asset movement needs to be documented within your audit trail. Most importantly, the reporting that you produce, including the digital asset cost basis report, needs to be able to trace back to a defensible ledger for every single transaction that took place. And this is where most investors are going to fall short because they don't have these records. So, what does the reporting look like? The most important thing during this cost basis reconstruction process, from my standpoint, is the cost basis report. Not all tax softwares will give you this report. It's a detailed tax lot level cost basis report. It could sometimes be called a closing position report. So that's going to show at the tax lot level all the assets you're still holding, the cost basis that's been applied based off of your cost basis pools and methodology, and the dates that were purchased, the amounts, and all the other related information. You also want a disposition schedule that's showing every asset that you dispose of that triggered a gain or loss, along with a spending and income, gifting. You want all of these documented on separate schedules. And most importantly, you want a consolidated set of transactions that includes every transaction that took place for that year. So you want to capture all this transaction level data, but you want to go a step further and you want to document the steps that you've taken and the assumptions that you've made during this cost basis reconstruction process. A formal methodology memorandum that covers the scope, the cost basis method that was used, if revenue procedure 2024-8 was applied, if there were data gaps, what assumptions did you apply from a tax perspective. So you need to be building all of this data as you're doing this reconstruction process. And this is the question that I usually get from people. Can we just start this year? Again, there's a cumulative nature to tracking your cost basis. So if you have prior activity and those digital assets are carrying it forward into your current year, you're going to have to go back and calculate this all accurately, or your starting position is going to be inaccurate. So the next big challenge that is creating more complication for digital asset investors who haven't done this process is now we have Form TDA, which began with the tax year 2025, where proceeds are being reported. And, this is something that we're working through with clients at Camuso CPA. As we move forward into future years, cost basis data will be phased in, reporting will become more granular, more account specific, and it could potentially make mismatches easier to detect. So taxpayers not only need to align themselves with these broker reported statements and make sure that this is all reported correctly and any reconciliation issues are appropriately reconciled on your return and reported, but you need to make sure that you have this cost basis information accurate. For legacy assets, the exchanges are not going to have this data to put on the 1099 DA. You're going to have to substantiate those cost basis positions. So it's very important that you have this cost basis data. It's going to become more visible. And when you dispose of these assets, you are going to have to take a position on what your calculated basis is. And this can have an impact on your holding period as well as your gains. And also, if you're only selling a portion of that asset, the other portion can carry forward into future years. So it's just imperative to get this correct.